Good morning, everyone. I'm Joaquín Garralda. I'm the chairman of this panel. I'm the president of Spainsif. And let me please turn the other one, please. Okay, don't worry. No, just a few words about Spainsif. Spainsif is a forum for sustainability investment, and I think it's a multilateral, let's say, multi-stakeholder organization, because we have banks, we have asset managers, we have, of course, suppliers of information and academics, we have NGOs, and last but not least, we have trade unions. So this is very interesting for having different points of views, and I think all stakeholders that are concerned about social investment or responsible investment are inside our association. So I think it's interesting, and we have some members of it. You can see that most of them are very, very known for you, some of them not, but let me introduce our speakers in the panel. In my next left hand, we have Tomás Conde, who is the ESG Specialist and is from the Spanish Association for Investor Relations. So we have the issues, the point of view of the issues of bonds or shares. Next to Tomás, we have Julia Salazar, Sales Director of Amundi, a very well-known and a very, very expert in this field. On his left, we have MSCI, Antonio Panagiotopoulos, something like that, excuse me, and a Senior ESG Analyst of MSCI. It's a very well-known supplier of information about the social responsibility. And on the last, but not least, of course, CaixaBank, we have Sandra González, que es directora de Banca Responsable de la CaixaBank, to be precise. Well, we have different point of views, and I think it's interesting because in some of the previous comments, they say, well, finance is very important. It's very important to advance. Sometimes it's the key that keeps a little on the shadow. But let's speak about it. And so I have some questions here. And the first one is, well, let's have just a small presentation from everyone, because some of them, perhaps you don't know their organizations. So please, just 2 minutes about every organization and to know about it. And afterwards, we will discuss about the evolution of social responsibility investments. Please, Tomás.
Thank you so much for the invitation and for the presentation. Well, I represent here today ARIE, which is the Spanish Investor Relations Association. It is a private association of over 40 members. 86% of the market cap of the stock exchange here in Spain is represented. Most companies belong to not only listed companies, but also issuers too, although they are not listed. And and I specifically work on all the implications of ESG. This is kind of a brand new position for the last year. And previous to that, I spent 26 years at BVA and some of them in Washington at the IIF. So this thing that maybe 4 or 5 years ago was kind of brand new and nobody knew the acronym of ESG now is all over. And this is kind of funny because when I was at the IIF, I still remember my former CEO saying, hey, Tomás, this ESG thing, is this like a little bullshit or something? And now they have this amazing sustainable finance, working group. And the person that was saying that now in his title says head of sustainable finance. So that is like a little anecdote that represents the dramatic change of all these ESG that we will be discussing today. So I think that's enough for my presentation. Thank you.
Good morning, everyone. First of all, thank you very much for having us here today. I'm representing Amundi, and just 2 words on the asset manager. We are the biggest asset manager in Europe with 1.4 trillion euros under management. And we are probably, if not the first one, the second one in terms of sustainable investments. We have more than 3 billion euros under these type of strategies that could be considered as ARIE. And apart from prices and awards and all those things that I don't want to bore you with, I would say that the most important thing about Amundi and sustainable investment at the moment is that we are committed to become a full 100% ESG asset manager by 2021. So we consider ourselves pioneer in these sort of investments, and we are making a huge effort in advocating for these type of strategies with our clients that during the past 2 or 3 years have become more and more interested in these type of strategies. Thank you.
Thank you. First of all, many thanks for the invitation. I represent MSCI. MSCI is the leader in providing ESG data. Aside our ESG research, analysis, and data, we also have our index business, our analytics business, and our real estate business. We are hoping that we can combine all of them with an ESG profile. Personally, I'm Antonio, so I work for the past 4 years in ESG research. I'm the industry lead for oil and gas and climate change. Prior to that, I was actually in the oil and gas industry, in refineries, petrochemical plants, and shipping, before moving to the brighter side of things with ESG. So yeah, happy to share some of the data and some of the work that we've been doing, both for biodiversity and climate change. Thank you.
Hello, thank you for the invitation. My name is Sandra González and I represent CaixaBank. CaixaBank, for those of you who don't know it, is the leading retail banking in Spain. It's also a strategic partner of Obra Social La Caixa, which is the organization that is hosting this event. I'm coming from the banking perspective, but I also wanted to point out that CaixaBank Asset Management Company and the Pension Plans Company, which are among the leaders in the Spanish market, they joined the United Nations Principle for Responsible Investment back in 2009. Both of them, they have a strategic plan to also achieve the whole portfolio, the whole investment portfolio to be managed under ESG factors. They are almost there. They have been working towards it for a long time. We still have a little bit to go, but just as my colleagues, we think that it's very important. I guess we will talk about this.
Thank you. Well, the first question is about the evolution, the point of how in social investment it has been so, let's say, popular years ago. So I would like to ask Amundi, because you have a long trajectory in this field. How do you see this evolution, your point of view about how it will work on the future?
So to be fair, it has exploded in the last 5 years. Up until now, it was something that we could speak about with maybe some institutional clients, foundations, NGOs, and that was the bulk of our clients for the past 10 years maybe. So if you see our assets, most of them are for these type of clients. But the good news is that for the past 5 years, especially last 3 years, I think this is unstoppable, and it would be surprising if we go to a client and speak about this and they are not interested. Actually, apart from the asset management and the vehicles that we launch and the strategies that we launch for them, we are getting more and more requests for advisory. to help them become a full asset manager, a full bank dedicated to these type of investments with ESG criteria. So if we see the trajectory of Amundi, I would say that the growth, the pure growth average has been 25% per year for the last 10 years. So it's really good news. And as I said, I believe it's unstoppable.
Comment on it? Or perhaps I will ask Sandra, because you said that CaixaBank is, CaixaForum, CaixaBank, they are very connected as the foundation. And so usually the foundations used to be the drivers of social responsible investment. How do you see this integration with bank, CaixaBank, and the foundation there?
Well, I represent CaixaBank, so my job is to integrate environmental, social, and government factors into the responsible business. So we are not talking here about philanthropy. We see the strategic alliance as a way of pushing forward the agenda and supporting some of the foundation strategic plans. But our main concern is how to help our customers to become more sustainable and to invest in companies that we think are sustainable. So the focus, as my colleague was saying, is to help these people who want to invest responsible find ways to do that, and also to make or to try to push forward the companies in which we are lending money so that they become more responsible every time. So we are really concerned about how we can make business that is responsible and how we can make more business and more responsible.
Thank you. Now, let's consider risks. The question is the relevance of sustainable investment for risk management and SDGs. Perhaps Antonio or Tomás, or you can comment too.
Shall I take that, Tomás? Thank you. So as the panel has already highlighted, it's not about philanthropy. It's not about philanthropy. It's not about necessarily doing good. It's about risk. All those factors, be that biodiversity and land use, be it climate change, they have an impact on the bottom line of companies. They have an impact on how businesses, boards of directors, CEOs see the long-term future of the company and how they try within risk management to improve those indicators, those risk sources that are present in their business lines. So in the way that we do our research in MSCI ESG research, each company has a unique risk profile based on their assets, based on their revenue, and based on that classification, we see risks emerging both in biodiversity and climate change as a business continuity risk rather than a risk of doing just good.
But from the point of view of investor relations, I think risks you are very concerned about it.
Yes. One of the members of the ARIE is precisely a collaboration. It's a communication and brand and a strategic consultant firm in which I'm a senior advisor. And you'll be surprised to see still how many companies do not, and this sounds like a sin, but it's true, how many companies yet today, when you check the risk matrix, it is not climate change, it's not even mentioned. And but then on the other side, you check their corporate communication, not the legal ones, some others. Well, not with the new directive. It's changed a little bit. It's changing, hopefully. But it's something surprising is that they all mention and talk about and discuss about how important ESG, environmental, social, ethical, corporate governance issues are, and then they are not even mentioned within the metrics that is approved by the board of directors. So I think that this is just, it's still surprising to see that not even one single CEO in this country and in Europe would say that climate change is not vital to the business, and the climate change as such is not even mentioned in the legal and the good information. But on the other side, we have the PR side of all this, and all of them would say, yeah, this is the most important issue that we are facing in the coming years, and the 2030 agenda is critical for us, and the SDG, it's within our ADN or DNA. Yeah, definitely. So let's just be cautious about that. And this is why the investor relations, the IRAs, investor relations officers, they are the guys that have to sell the company to investors, and basically they try to sell not only mainly metrics, financial metrics, but now increasingly non-financial metrics. And but still you see those, you know, gaps that analysts like MSCI and some others are increasingly paying attention, and they put it on the table when you go on a roadshow and you happen to ask a question to one of these guys that some of them they don't really know, and they always, where's the sustainability director? I mean, stuff like that. So what I'm just saying is that I know this is critical, but still there's a huge way to go to fully embed ESG within the business.
Yeah, I completely agree with what you are saying. I would also like to point out some of the challenges that companies are facing to do that, because I think we are all very committed and we are working towards it, but it's a market issue. There is the task force on climate-related financial disclosures, because this is a market issue. Investors want to know what's happening with climate change, with biodiversity, but the metrics are not there. Methodologies are still being created, they are not very sound, and I also know that financial people, they really like to have everything with mathematical models and everything very clear. When you come and you start talking about scenarios, but you do not really know, because there are no public data as well. And we also have a challenge. You were talking about the non-legal reports having financial, environmental or social information. What happens when you don't have even that information, or when you are talking about SMEs, which are the backbone of the European economy? If you don't have this data, it's very difficult to assess what the risks are and what is the effect or the expected effect on your investment. So we all agree that they have a lot of impact, or they are going to have it, and they are already having it, but we are not sure how to measure it. We just know that it's there. And I think this is a challenge that we all share and that we need to push forward, because it's relevant for the investment, it's very relevant, and we still are going there.
So afterwards, we are going to talk about the standards and taxonomy, of course. It is the key issue, but please.
The only thing, because you mentioned the TCFD, I think that climate change, and particularly the TCFD, is the first, if you like, paradigm of how finance, if you like, or the financial community can push through in quite a short amount of time. The TCFD was established in 2017. So the Financial Stability Board introduced the TCFD standards in 2017. We're in 2019, and at least my colleagues from MSCI can attest to that, that everywhere we speak to our clients, which are asset managers, pension funds, asset owners, they all are interested on how to report on TCFD. So climate is actually becoming part of those extra financial, because there is a debate whether it's an ESG, how do you call ESG? Is it an extra financial risk? Is it a risk that has not yet materialized into the business, but it could? So climate change is already broken, if you like, that silo from finance into the extra financial kind of world. And I think for any initiative into the future, getting the buy-in from the financial community will ensure whether this will be a success or not.
Well, Julia, you are in the middle because you are an asset manager. What's your point of view about this idea of issues and markets? And do you agree with Tomás that said?
Okay, I have two perspectives: the financial community, but also the investors, the final investors, which is also important to realize. That there was one thing that Antonio said that was very important, and I want to emphasize that this is not a marketing tool, and we believe that, I mean, obviously when you are doing sustainable investment, there's a will to contribute to society or to environment, but the ultimate goal and why we do this is because we believe that it's good for our portfolios in terms of risk return, and these things that they are arising, the challenges, is very important to convince the final client because it's so new for them that when you talk to an investor, they say, yeah, but is this going to detract money from my investments? Is this like a charity thing? Yeah. So it is a real challenge, but not only for the financial community, but also for the end client, that they need to understand and to be convinced. So it is very important to get the taxonomy right, the standards, and to figure out certifications, whatever global things that matter, not only for the financial community, so we can act and we can become better at this, but also to really convince the investor that has never heard of this. Like, is something very new for them.
In fact, if I may, the brand new taxonomy release June 18th is precisely working on that because there is a lot of greenwashing yet, and I mean, you should agree with me on that. And so there's this piece of amazing 3 new releases. It was the main one was the taxonomy, which is a measurement to exactly know what is and what is not sustainable, all right? And so I think that's going to be critical. But initially, the taxonomy, the European Commission taxonomy, is addressed for only, right now, investors, right now. And banks are already right there, next step, and they are already doing a whole bunch of work in order to know in what way that taxonomy is going to be translated to the business, so that I'm not a bank any longer. Now banks are really concerned, and they are spending a whole bunch of time and money trying to translate that and trying to find a good guideline, so to avoid having to be regulated and kind of find some kind of self-regulation, which is always better than being regulated by a third party. In this case, that would be the Commission again. But anyway, I think that, for me, what I wanted to underline once again is that they mentioned greenwashing like maybe 20 times, and so that's one of the most, repeated words. So I think that this is all definitely helping. The first piece of legal directive was the 95, which was the non-financial reporting directive, that was really helped a lot in order to kind of finish with those, I was going to say bullshit reports, but I already said, so it's okay, that they brought no real information and that were not signed by the board of directors. And now you have, well, each country has been transposed in a little different way, but the Spanish transposition is not only 1 year old. It took place December 20th last year, and it meant a definitely change in the way that companies are informing about these ESG issues in a broad way. It's been really, really very positive that now mainly these current accounts it's absolutely embedded without the rest of the financial information, and that once this information has to be signed by the board of directors, each and every one of them, and it has to be verified by the third party, now things are changing dramatically for people that were used to doing this kind of information, because now these guys, they don't want to assume any legal responsibility. So now the information is getting shorter and much better and much more specific. Because as Michael Bloomberg talking about TFCD, a Task Force on Climate-Related Financial Disclosure, G20 FSB initiative, and the second report was recently released. What doesn't get measured doesn't get managed, and that's part of the deal.
And the point of view of banks, because at the end of the day, you have to speak to savers, the ultimate owner of the companies. Are you doing a lot of effort? Do you think that banks are reacting to it or not?
Yeah, definitely. Banks are reacting to it. There is the United Nations Environmental Initiative for the financial institutions. There's a lot of work being done because as the banking industry, we feel that we need to develop our own methodologies and try to translate the taxonomy, which was thought for investors, into our lending portfolios as well. And we, at least in CaixaBank, we have been working a lot about this. We have been implementing the taxonomy internally, but we are also doing engagement with our customers. We are going to some companies and some sectors and saying, we are concerned about these issues. We want to see clear signals that you are going to make some changes in a timely way. And if we don't see those changes, things may change in our relationship. That's for the big companies. With retail customers, this is still an incoming thing. You can see that with millennials, with Zs, they are more interested about that. With high net worth customers, with institutional customers, retail is still a bit, I would say, a challenge that we have in the whole country. But we are still engaging with them because we see that that's the way forward. You cannot not manage environmental, social, and governance risks because they are financial risks. So we need to do that for our customers. So if we do that, we are going to be safer as a bank and more profitable, so they are going to have a better service in the end. So it's not that we see the retail demand coming, but we are still pushing it, and we are engaging, and even at some points we are not investing or we are not lending to some companies that don't have clear signals that they are taking this seriously. And we are also working as an industry to develop these tools because everybody's saying we have to align our portfolios to the Paris Agreement, but how do we do that? What is the data? What does it mean in practice? What is the GSG emissions distribution among sectors, and what is my share, and how do I do this? So there's still a lot to do, but I think that, as you were saying, there has been a lot of movement in the past years, and I would say it's general, and if you talk to people, all the teams are really working, and there are a lot of teams working on this.
Yes, we have to tackle the issue taxonomy, because you know it is the word that before it wasn't not well known, but now in the financial sector, taxonomy it's a kind of, for some of them it's a kind of scary, you know, because it's the first report was more than 400 pages. 414. Yes. So very good report, let's say, but difficult to understand and to differentiate among activities. It's not about sectors, not about companies, about activities. And next, do you think it's the right approach, or we are in the right direction, considering that we have a lot of methodologies, a lot of initiatives, standards, etc., etc.? Do you think that the European Union is in the right approach? At the end of the day, it would be the only standard in the world. Amundi, what do you think? Excuse me. Sorry. Amundi, but it's Julia, excuse me. Julia, what's your opinion?
Maybe as of today, I'm a bit reluctant because there's so many activities and so many different types of investing, and in the end, so many objectives, final objectives for the investors that at the moment it's very difficult. It's very difficult. It seems like it's more, when we create vehicles or strategies for investors, they are very ad hoc, like for each one of them. And when we take the initiative to do it, the moment we are leaning more on the Sustainable Development Goals. Maybe it's because there's nothing yet that is entirely useful and that we can use. In the end, it's, as you said, is not there yet. In the future, hopefully, it will be to avoid greenwashing and to have a standard for the entire community. But as of today, it is not something that we can rely on. Maybe it's because SDGs are easier, or because we get the clients asking for different things. But at the moment, what we are doing is that approach. It's very difficult.
It's your turn, because you are a very big company that about methodologies and
we are
yes.
we are all about methodology, all about having a transparent methodology that investors and asset managers can follow. We have, I think it's around 700 ESG related indices, starting from low carbon all the way to Sustainable Development Goals, a recent launch. We have been scratching the surface. We are avoiding, due to our research, we try to avoid greenwashing. We are relying on revenue information, so financial data, not ESG data. We're trying to break, again, through research and analysis, those silos. However, we see a very important input from governments and like international organizations such as the EU, because these are the ones that will essentially provide the guidance for companies, for investors alike. We will have a methodology that pretty much reflects that, but there has to be a move from governments, especially as you see, and as previous panels have said, companies are not exactly doing what they should do. So that's the gap where governments and supranational organizations can help bridge and then provide more information, more, if you like, material information to both investors, asset managers, and asset owners.
But let's go in deeply. Biodiversity.
Correct.
This is not only climate change or climate emergency, but how for your company, it works a lot with information. Is it easy for you, biodiversity, to include it in your indices? Or
based on our methodology, yes, because we break down into activities, so from products to supply chain considerations on the biodiversity, and then we have a library of key issues, and depending on the industry that a company belongs to, they have certain risks, and then we measure how those companies respond to those risks, essentially. But it's being done from a bottom-up level, so we start with assets, revenues, where those have exposure. Again, I will take an example from the oil and gas industry. The oil and gas industry, and we heard before from Total, which are indeed kind of in that higher end of scoring, at least of management versus their peers. But essentially, that's what we're trying to offer. Have certain standards, measure companies how they meet those standards, and then rate them as a peer set. So see who are the laggards and who are the leaders. And for biodiversity and land use, there are many risks with regarding oil spills, regarding water use, or water stress, depending on which area you have your operations or where you gain your revenue from, and others. Very detailed, very transparent methodology.
If I can share the experience of Amundi to show how difficult it is at the moment to process all the data. We are trying to measure all these impacts, and we are doing it manually. We have people doing surveys to companies with questions on terms of different KPIs on what is the CO2 emissions avoided, what is the, I don't know, the water used, all these things. the lack of international standards made us do it manually, one by one, sending maybe. To give a specific example, for our education fund, which is a fund that helps with the 4th SDG and tries to get education to everywhere and blah, 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 we have to send the list to all of our companies invested of a number of pupils enrolled, number of classes, number of beds in dorms, all these things, and we gather all the information manually. So that's one of the difficulties at the moment with the standard, not having the standard data in the industry.
I will just add to that because we're facing exactly the same problem, we have over 325 full-time employees that are working on ESG, only on ESG research, just to cover the lack of standards and the need to do manual work.
The lack of standards and the abundance of standards, because sometimes there are so many standards that you don't know which one to choose. And companies, we are lost here because we used to have, in terms of reporting, okay, we started with reporting because reporting should be an inventory of what you do. And if you get a good reporting, it means that you basically are, informing about what you do. So we started using the GRI, the CDP. Now, suddenly, we get the Task Force on Related Financial Disclosure from G20 and FSB, and now we have a new taxonomy in place. And then there are some, and then you have the Network for Greening the Financial System, which was basically, it's a bunch of central banks working around greening the financial system and all that. And the problem is that, all this lack of standards due to those many standards around does not allow companies to properly report on or impacts in terms of environmental or biodiversity or whatever. By the way, biodiversity as such is not even mentioned within the European Commission Action Plan, not even once, which is amazing. So as I was saying, one of the 10 initiatives that the Commission said was going to do, the very first one was precisely the taxonomy and the specific definition. I think that's really interesting because the taxonomy is a tool to help investors understand whether an economic activity is environmentally sustainable. It is a common language between investors, issuers, and policymakers that can build confidence that investments are meeting robust environmental standards and are consistent with the high-level policy commitments such as the Paris Agreement. And so I think that this is because if not, we don't even have a common language here. The problem, I attended 3 weeks ago at EY, this very interesting report release that was after a year of applying the already mentioned Law 11 here in Spain, which is transposition of the directive. The very first conclusion was each company calculates the data in a different way to answer the same indicator. So there is no way that we could compare one with each other. There's no way. So that was a very interesting thing. So to tackle all of these issues, it's specifically why this taxonomy is created. And this is going to be really, really interesting. By the way, talking about the taxonomy, as I said before, when I was in the States, and this kind of a huge lobby for the financial system, which is the International Institute of Finance, they used to say that, and I've mentioned this a couple of times before probably, we, the United States, we invent, we innovate. Chinese people, with all due respect, if anybody here, copies. And you know what Europe does? Regulate. We love regulation. But anyway, all of these guys are really paying a lot of attention, central banks, on this taxonomy, because this taxonomy is going to, I hope, will end up with all this lack of and greenwashing and stuff like that, and it will definitely help embed environmental, social, ethical, and corporate governance issues in the business, for the business, and to be or not be eligible for investors or any other stakeholder.
Well, before we give the microphone to the audience to have any question, yes, I would like to propose you a tweet, just very short sentence, and concerning the tragedy of the horizon that says, the governor of Bank of England. How long? Is 3 years, 4 years? Because everybody agrees this long-term climate, etc., etc. But what's your point of view? It's only 3 years or 10 years?
The more you leave it, the sooner it comes. Sorry, the more you leave it, the sooner in the horizon it will come.
And your bet?
And my, sorry?
Your bet about for how long? Is in 5 years you will see clearly or not?
I will borrow from climate change part. The IPCC in its newest report said that any new financing or any new, like a greenfield operation, is probably going to become stranded in oil and gas. So starting from that, and depending on which scenario you believe, I think you've mentioned that before, there are around 220 scenarios about a 2-degree world. Currently out. So depending on which scenario you choose to do, then my bet would be 2025. But again, that's just
Sandra?
I wish I have a crystal ball, actually.
I don't have the crystal ball, and I really don't like to bet. I'm a bank. We are very safe institutions. I don't have any idea. I just know that we need to tackle this now, because by the time we have the methodologies and the data and everybody on board, climate change, it's already here, so it will be too late.
Julia?
I'm just going to bring the good news, which is that we believe that it's not going to be the methodology or the governments who are going to push this. Thankfully, it's going to be the society, and we're seeing it. So I think I'm positive about this. So we need the methodology, we need the push of the governments, but I believe it's going to be more the society which will bring this.
From the point of view of the pragmatic.
Disagree. Once again, I disagree. This is about, at the end of the day, I'm sorry to say this, regulation is the only way. I mean, because if not, things will keep being the same. Now we have a great framework, which is the...
How long?
How long? I would say 2030 sounds good to me.
All right. So, please, the audience, 1 minute, but no question, just 2 questions. I have permission here. If it's long, just 1.
I've got 2 questions. You can choose which one you answer. I just like to ask you your perspectives and views in how you plan on uptaking, the natural capital concept across your businesses. And the other one is more personal, but it's just too tempting because you're all here up there, is how you take on board asset devaluation linked to climate change impacts. You can choose which one you answer. Sorry, my name's Steven. I work with Total.
Yeah. I heard you before, Steve. So should I take both? Sorry, the second question, I'll start with the end, which is about devaluation. And that's more relating to the climate change as it stands now in our model. We have come up with a new methodology, if you like, for climate change that kind of splits up a universe of almost 9,000 companies around the world to asset stranding, product transition, operational transition, neutral, and solutions. So the idea is we're measuring the contributions to carbon of companies to carbon, be that scope 1 and 2, or actually product emissions. And then we measure the positive, if you like, characteristics of companies by measuring generation of revenue assigned to SDGs. So within that framework, the asset evaluation comes mostly on the asset stranding part, and that's mostly at the moment coal mining and oil sands. That's more on the physical risk. We are, as some of you know, or if not, it's a great opportunity. In September, we have acquired Carbon Delta, which is a fintech company based out of Zurich that are doing exactly that, mapping physical risk and also mapping transition risks. Whereas the transition risk was something that, because of our bottom-up kind of approach, we could see it in certain valuations. The physical risk was, let's say, not so in the forefront. However, we see that, and especially on the real estate business, we've just issued a new paper on real estate and rising sea levels. So again, the physical risk part is starting to come much more into the debate. However, we do see them as complementary, the transition and the physical risk. The more you let transition risk grow, the more you will go into the physical risk kind of bucket. So in a way, we're trying to tackle first the transition risk, and the physical risk comes as a direct consequence.
But finish, just two comments as chairman. It has been very interesting, thank you. Just first one, regulation or the industry driving this movement pro the idea of financial climate change and biodiversity. Well, perhaps there are some organizations that are front runners, and they are here. But the rest need the regulation to jump into, because at the end of the day, they say, well, we are smaller, etc., etc. This is a couple, the front runners and the regulation for the rest of the group. Perhaps for the front runners, they say, hey, listen, just soft law because we made our methodologies or whatever, and so they don't like it. But I think they have to tackle the issue. And the second comment is eco-label. I think if the taxonomy achieves an eco-label and it's a standard, it could be a very important driver. Because at the end of the day, this is easy for the market, for the banks, when they speak to their clients, hey, has eco-label, yes or no? And this is easy solution, easy decision, but it's not, the journey is long for now. Thank you very much. Thank you for your cooperation, and thank you for the audience for your attention.